The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman here, Tiger Technicians Hour. Thank you, Steve Rhodes, for a great 2 hours. And of course, you've got John Logan kicking us off here at TFNN, 8 o'clock a.m. in the morning. And we got programming right through the day. So, hope you all had a great Thanksgiving. I certainly did. And now we're back in the market, and we're looking at the Dow down 62 at 17,765. Looking at the S&P, down 16, a little deeper, at 2,051. You got the comp index down, 62 at 47.28. That must be Apple. Let me do one thing at a time. Gold is up 20. It had been down 26 last night after that referendum was turned down. Coming back very strongly now. This is going to be up 20, so it's at 11.95. Silver's up 70 cents at 16.19. Platinum's up 25 at 12.27. You got high-grade copper's up 4.90 at 2.90. It was down way below 3. Nice rebound. Going to be watching this closely. Got now, this is going to be very interesting because I really do have to do this. I want to go to the USO, which is the United States Oil Fund. I think there's a turnaround here. I think that oil is about to bounce, and I think the dollar's about to pull back. I don't know yet exactly what depth it'll creep down, but this is either a G or a brand new leg B on the upside. So at this particular point with the MACD stalling, the stochastic down at 60%, I'm suspecting that we've just had a sell-off, a kind of a blowout sell-off in the to the downside in gold. That gold is going to rally, and gold stocks should do quite nicely here. And at the same time, dollar's going to be pulling back. USD JPY, which is the currency pair. Let me just go there right now. The USD JPY is, in fact, just making leg D as we speak. Now, I had some questions over the weekend. How come you've gone so bearish suddenly? You're getting rid of your long positions. You're starting to set up short positions all last week. And certainly on Friday, you add to those short positions. Whoa. How come you're even looking at some of the very best sectors as possibly being shorts? In the work that I've done over the last, I always say a couple of months, on the historical data that I've done, as well as based on the Chapman Wave methodology in the near term on the daily charts, not the weekly and monthlies. Weekly and monthlies in many cases look just superb. I suspect we're going to have a pretty deep correction. It's already started. It started late Friday. And that correction is going to take us a little deeper than people think, but we will not break the Dow low of 15,855 that was made on October the 15th. In fact, 16,757 could be a very important support level. That's the 200-period exponential moving average. I'm not going to say right now what I'm thinking on the downside. I might even say 17,500. All I'm saying is that for positioning, it's been very important in my work that I ignore I don't think there was a single person on CNBC that was interviewed over the last week. I don't know if I even heard them all, but I heard enough for not a single person was talking about a down move. They were all talking about a strong move because this is seasonally positive, as well as the fact that 2015 should be a great year. I don't disagree. I just think in the shorter term, there's enough evidence to say with all those peak Ds, Es, and Fs, and Gs, look at the Dow diamonds. And this is a classic in the Chapman Wave methodology. This is what I spent hours on. Over a period of explaining to my whenever I do a Master Trader series, or even when I do it for my daily call for my subscribers, explaining the methodology involved here that says that there could be a G in the Dow, but we got it in the Dow Diamonds. The Dow just failed by 1.5 points to make G on Friday, leg G, that is, in the Chapman wave. But there is enough evidence to say, look, when I go to my Dow Quartet, GE made a 27.10 high, followed by 27.09 two-bar reversal on the 21st and 24th of November, and has plunged from the 27.10 area to 25. The low today is already 25.84. When I say plunged, I mean that it went down quicker, way quicker than it went up. And it just stopped dead at the 200-period exponential moving average in the daily, as well as the 120-minute chart. IBM, we're just dismissing it as a kind of a has-been, just doing nothing here. And then you've got Triple M. And Triple M has made some kind of a double top at 160.86. We won't know if this is going to be a double top until it's a 158.79, until the 157 to 156 support goes, and then we'll be able to say sell signal. I don't know if yet it'll be a sell mode immediately, but that's what I'm looking at. That weekly chart is fantastic, and the monthly chart is stupendous in leg G/C. I think it will go to a D and E. When you're looking at the UTX, the fourth one in my Dow Quartet, better type in UTX and not UTC. UTC is the University of Cape Town, UCT. Oh, UCT, not UTC. So this is a peak F, almost certainly in the UTX and the daily chart, and it's going to hang around the 108s, but if it breaks under 106 over the next 2 weeks, we're looking at a very quick filling of the gap in the 104 area, and 108.07 is the 9-period exponential moving average in the weekly, which is improving a lot. Monthly chart needs a little bit of work. So when I put that together, when I put it together, the VIX index, look at this. Friday was a hint that something was happening. Today's a bit of a follow-through, up 9% at 14.62. And what's really important is that you had the island reversal at a peak F top in the Chapman wave in the daily at 131.06. Island reversal, pulls back, plunges from 31 to 12. I mean, this is an incredible decline. The weekly chart still looks terrible, but I'm watching the 9-period moving average. If there's a close on Friday above 14.58, let's call it 14.65 to give it room, that'll not only improve the weekly chart, improve meaning it looks more positive for the VIX, negative for the market. I'm skipping the monthly chart just at this particular time. So that's what I wanted to go through. I also wanted to say, look at the QQQ series. The peak, possible peak F rather than a B being made today, but at 104.74, it's given back very quickly 2 days worth of 3 days worth of gains. That's not the issue. The day's not closed. But I can just tell you this, that if the QQQ series closes Friday below 103, not only is the monthly up channel weekly resistance Chapman wave repellent zone functioning, it says the next level of support is going to be very important, 102.17 on the weekly chart, and I suspect it's going to break at some point. Now, it's a little surprising to find that Apple has such a strong intraday pullback. It's down 3 at 115.62. But what? It made a peak D in the Chapman wave. I was expecting something like this, and then I wanted to say to myself, okay, you're looking at Apple. It's a very big part of the QQQ series. So is the IBB, all those NASDAQ biotech stocks. Both the QQQ series, the semiconductors, the biotechs, and one other group, the XLV. Look at this. XLV is the S&P Select Healthcare Spider, very working beautifully in the monthly, but a little extended. But look at the way it's walked the 9-period moving average. It's at 69.52. XLV is the symbol, down 9 cents only. The weekly chart has got a brand new, either a leg F or a brand new leg A. And if that's the case, it looks to me like it's an A. And on a worst-case basis, it's going to go from 69.54 down to the 66.65 area. That's the big test, if it even does that on the shorter-term basis. But the daily chart is saying, hey, watch this closely. It's holding well. It maybe is making a Chapman wave 2-bar reversal right now at peak E, but that's not the issue. The issue is, how does it handle the 68.80 to 68.40 key support area? A close below that says, okay, you're going back into the body after the leg, body, neck, head, and beak formation concludes in a Chapman wave stalk leg formation. So those are the good things. Now, a question in the den about Merck. Well, Merck is part of the PPA. It just made a leg D in the daily. Monthly's had a fabulous move back it went from 61.33 back in, I think it was September, plunges August, September, plunges down to 52 something, spirals back up to a new all-time high of 61 today, of 61.32. No, it failed by 2 cents to make an all-time high. So it's testing its all-time high. It's in the monthly chart of Merck MRK, 60.69, up 29 cents right now. It's made a beautiful left side, right side price time match, as well as, look at this. Look, from there, I used to have that. What happened to that chart? I must have changed it. From there, I did, because this was the whole thing. This was what the left side, right side was about. Okay. So from there, green, let's make that kind of a pink. Make this one green, and now let's double this. Here we go. Watch this closely. Here we go. Make this green. Let's see where it comes out. Whoops, right to there. So it's extended in time. That's very good. It's extended in time. Yes, this should be some kind of a resistance area. If you look at the PPA, what's a PAA? Power Shares Aerospace Defense, not interested. PAA, Plains All-American Pipeline. Whoa. PHA. Go on, I've forgotten. PPH. Here we go. PPH. Market Vectors Pharmaceutical ETF. Thanks for the help there. That is looking. Market Vectors has gone to a leg E, a very quick E in the monthly chart. And I'm suspecting that this whole area, the pharmaceuticals, healthcare, etc., I don't know what it'll be, but it wouldn't be surprising to me if there's a bit of a scare right now and they start to pull back quite sharply before maybe rallying again. So DE, this is leg E in the, here we go, in the pharmaceutical market vectors ETF. And as a result, I'm watching this very closely to see where it pulls back to. There's still internal strength, so you can see the rotation. Look, Dow's down only 0.29% at minus 51. S&P's over double. It's 0.71 at 14.74. The 500 stocks are showing greater weakness. So now, with that all said, I've gone through a bunch of things and I'm explaining why I'm somewhat negative right here. And I'm increasing that negativity depending on where we close today. They're going to constantly be these little internal bouts of strength to test strength, because there have been buyers all the way through who keep saying, every pullback you got to buy. I'll be back. Dow's down 50, S&P's down 14, Basil Chapman, Tiger Technicians Hour. Love to take calls at 877-927-6644.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details, and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So let me just finish a little bit of work here on the HCP, which is HCP Inc., which is in the healthcare area. Has this started brand new? Is this an E/B? I'll call it E/B. Don't see anything wrong in this right now. So it's looking very strong. 45.46, Austin, the Den about it. And HCP is, let's say, in the healthcare. It is very strong on the daily chart, very strong on the weekly chart. Monthly chart, it's being boosted by the others because it doesn't look, it looks okay. But if you had to look at the technicals, you say, Now, the MACD needs a lot of work to be able to confirm it, but at this point, it's looking good. Healthcare REITs. Okay, thank you. So, Peaky and the Den wanted me to look at both HCP and there was another one. HCP and I can't find it. Yep, HCP and HCN. So both of them I had done some time ago. I don't have it now. I like HCP. Let me write it down here. HCP and HCN. Got it. Okay. And now let me also put HCN just because I want to see which stocks are showing that they are totally ignoring any weakness in the market. And this is one of them. So A, B, C, D, E. This is F/D. Okay, so let's keep it that way. And the weekly chart, very strong for HCN. HCN is healthcare REIT. Oh, called, healthcare REIT. And the monthly chart has improved a lot, and that's how the HCP should be in the monthly. It should start to move higher, so it's making this very sharp, either V-shape or cup formation, trying to go back to the all-time high, which in this case is 80.07. So nothing wrong. If you're holding this, I would just say to you, some part of your position, just in terms of money management, could have at 74.50, somewhere between 72.87 to 72.35. I'd be looking at this and saying, if the market pulls back even stronger, and this is holding well, and all it can do is go down to the mid-72 area, you might even want to add to this particular instrument because it's looking so good. If it closes under 72, it just goes right down there. It doesn't even hold, but closes under it. Be careful, because the 71 to 70 area would be the next strong support area. But so far, I would not be looking to even take off anything. I'd be looking to possibly add at this particular point. So I hope that helped. Now let me look at a question. Any reason that you are not using the bar labeled E as your starting point for the trough count on the 120 E mini? Now let me see. That's a good question, because I remember going through this, but I just need to place myself exactly into that area. Okay. So now, all right. Question is, any reason that you're not using the bar labeled E, uppercase E, right there, as your starting point for the trough count on the 120? Yes, because that bar, let me show you, it's a good question, but in the chart wave methodology, you know that we don't use the bar that makes the high, or the low, except in the instant restart. So I do not get a trough until right there, and at exactly on my time, 22, so that would be 10 o'clock on the 26th. 10 o'clock on the 26th. Yeah, at 10 o'clock on the 26th of November, there was a trough at 2071.75 in the December E-mini. And then it goes trough A, B, C, D, E, and now you've got F. So I hope that answers the question. And here's another very interesting part of this particular. I had a question as to the, what was the question exactly? How was it phrased? Basil? Nope, it wasn't there. Would you kindly elaborate upon the inside wedge idea, how the inside wedge idea works, and how 2020 is the target? Thanks, John. Okay, so John, this is what I'm looking at here. When I'm looking at the E-mini, let me expand it. There's a technique. Oh, let me see if I can get it here, because this explains it best. I'll just put it up in a minute. If it shows up, let's see if it shows up. What I'm looking at here is that from the high of peak E in the E-mini that was made on the 21st of November at 20.74. Let me just get into this here. Introducing the Chapman wave. Introducing, it'll pop up here. I have to type in the password. Hello, anybody up? Yep, there it is. So password goes in. And of course, you've got to know your password. And I do know my password. There it is. Okay, and we will look at the inside wedge, the chapter in the book, Introducing Chapman Wave Methodology on the inside wedge. I'll be right back. Dow's down 39, S&P's down 13.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. We are back at a question of the dead about ESRX. And yes, not a question, it was a statement. Where was it? Yes, Buffett was adding ESRX in his last filing. Oh, really? Top Dog says, hey, Basil, for healthcare strength, check out ESRX. I'm trying to think who they took over. Company I actually use. Anyway, yeah, so the ESRX is Express Scripts Holdings Company. Beautiful chart, A, B, C, D, E in the monthly. This is only C in the weekly, just superb chart, and it's showing tremendous strength. So yeah, not all things are equal here in the weakness sector, because the strength in some of these has just continued, and this is a real test. This is like having a sieve, especially after all that cooking and stuff over the weekend. But this is like holding up a sieve and seeing what's going to go through, what is being held up, 77.95, 78, 78.14, 78.15, 78. Okay, so there's A, C, and that is 84. Whoops, is that a weak one? 4, and that goes to 1. There it goes. So there's your D. There's your E. And if it's an this is going to be very interesting because we're on the cusp, by any measure, to say that there should be some kind of a pullback here, but the technicals are so strong in the daily of ESRX, but it is very close to some kind of a consolidation. Oh, isn't this interesting? You got a leg F? Yeah, A, B, C. Oh, I might have started in the wrong place. Yeah, you know what? You could be right, A, B, C, D. Now, so we restart, A, B, C, D, E. You might be right in the Dan. Medco. Thank you, Gator. And Gator used to work for them. I remember. That's what I was thinking of, and I just forgot the name offhand. So, yeah, Medco was the company that they took over. So I've got an E. I'll check it out. In the meantime, it's looking very strong, even in the monthly. But getting close to some kind of a consolidation, but that's not the weakness that I'm looking at in some of the sectors. Some of the sectors, for instance, look at Apple. What's happening this Christmas season is going to be very important for Apple. Why? Because this really is the season that gives a really big boost. Every year you've seen what's happened to Apple when it comes to the December season. Look, last year in December, it went from December right there. It had a pullback afterwards. December was concluded. Remember in 2013, then it pulled back for 2 months, 3 months, and then it broke out again. So that's that little mini pullback. In 2012, when the general market made its high on the 31st of December, Apple had actually already, remember, that was when there was it was a lot of uncertainty as to what was going to happen with Apple. So in December, it already made its 100.72 top. It was already pulling back, and then it pulled all the way back to 55.0. And remember, it was cut almost in half. That is quite something. And a question in the den was, could I have a look at junk? Here we are, junk, G-U-N-K, is Spider Barclays High Yield Bond ETF. Whoa! Not good. We spoke about this the other day. Will J&K participate in the rally that the TLT is having, or is it going to be independent, and is it going to fill in the Roman candle wick of the month of October, where it had a low of 38.93 closing at round number 40, and then here it is at 39.27. And there's that. Look at the way the 200-period exponential moving average was just incredible resistance for JNK, Spider Barclays High Yield Bond for ETF. Look at that. Just repel. At some point, it'll grab it and you move above it. But right now, you've got to be real careful. Now, I should not have put the up arrow in. I can't even remember why I did. There was no reason to put an up arrow in, even if it went to new recovery high. So that's 41.95 is the high, and 41.82. So that's so far a double top. Okay. Now, a couple of things that I want you to look at here. In my assessment of what's going on, I wanted to show and discuss with my subscribers the different factors that were involved in my thinking. And the conclusion that I've come to is that although you would normally expect, based on historical precedent, and this is what I was using earlier, is that anytime the market has survived September or October, usually very bad months, and makes new recovery highs, especially a new all-time high, then there's usually a close at, close to, or just above the yearly high thus far. And all I can say is that is one way that you can look at it, and in a way I don't think you're necessarily wrong. If the rotation continues, and we see that just like the Dow now is way stronger than the S&P 500, but the IWM, the 2,000 stocks, are, at this particular point, down 1.17, even weaker than the S&P, almost double in weakness, down to $1.39 to 115.31. So this is a very important period, because in the rotation, if there's a greater weight, W-E-I-G-H-T, not W-A-I-T, it isn't time. If there's a greater push to the downside as rallies constantly fail and the VIX index climbs, and the sectors that at least I know that I'm looking at and that my subscribers are looking at as potential weak links, if they pull back quite sharply here, then what I'm looking at is that there could be a surprise. And as everyone gets very bearish again, that's when we start to make some kind of a low. And everything about it, and I discussed this earlier on, said that the IND weekly chart, the Dow weekly chart, has made a peak A, possibly a peak E. It's an alternate count. One is very strong, one is weak. I've called it A/E rather than E/A. Why? Because I am really looking at this rotational aspect as containing the price in the weekly charts. My biggest concern, I'm going to discuss it here, I haven't discussed it before, is that my on-balance volume, one of my great techniques, technical tools I should say, is saying, watch out here. Because if certain aspects, if certain criteria are met, the selling could intensify. And that's what I'm going to be watching real closely. Look at the defensive stocks. Look at J&J, up at 32 cents today. When you start to see the defensive stocks, Coca-Cola, up, down 10 cents, but still ABCD, this is still good action. Look at Clorox. I haven't looked at it. I'm just saying. Let's look at Clorox. Look at that. Clorox up 44. When you start to see the defense, now it's not defense. It's not Raytheon, Lockheed. This is defensive. The stocks that give you dividends. These are the stocks that are your core, everyday, your mundane, everyday participants in the economy. Clorox, what else? PG. Oh, is PG still? Yeah, PG. Look at that. Oh, my goodness. All-time high right now as we speak at 90.61, up 18 cents. So there's some of the reason why the Dow is holding a little bit better. If you look at your Exxon, and I wouldn't be surprised if you start to see a little bit of a bounce. There you go. Exxon's up $1.35. That's the reason why the Dow is doing a little bit better than the S&P. So I wanted to just give you my thinking. I wanted to explain why. I want you to explain why we are in what we are in, why we're getting out of our long positions. Most of our, I think, in fact, I would not be surprised if we're out of all of our longs by the end of the day, 97.16, 97.20. So that was a rogue wave. This is a perfect example. The Chapman wave methodology, this is a rogue wave. Now, it's very interesting. I spent years, every single day just about, going through my different techniques, trying to refine them, trying to develop them, trying to establish criteria for them so that we could put them into some kind of a software program. And yet there are always those couple of incidents, couple of chart formations that differ just enough that if you were to try to make your program fit, in other words, if you were to form fit because of them, you'd land up with a whole bunch of extraneous stuff. Now, if I'm doing this stuff, and what I've done over the last, I would say, it must be close to 3 months. It might even be a little more than 3 months. I've spent a great deal of time rather putting all of this deeply into practice for my subscribers, which so far has been working out very nicely, I believe. Rather than adding any new techniques. But what's so funny about this is that within the techniques, some of them have been solidified to the point where I really feel very comfortable with them, and others have been refined to where I'm now prepared to go back and do my homework in looking at articulating ideas. So there might be some new ideas to the plethora, 20, I don't know how many different techniques there are under the umbrella of the Chapman wave. And here's one. It's filling the gap. And this is going to be very interesting. If for any reason Exxon, instead of breaking down and testing 89.08, it's at 91.97, up $1.43 right now, starts to rally in the daily, which will improve the weekly, not necessarily the monthly so much, but at least the daily, you could see a pattern that forms right here that basically in the 120-minute chart right there starts to give you an A to a B to a C to a D within the rectangle of the gap right there that had just formed from that huge gap down. On the 26th, it closes at 94.55, and on the 28th, lo and behold, it opens at 91.50. That is 3 points lower. Now, there's another technique that I've discussed, but I haven't made it into any really formal thing other than to say this is what you can watch for, and what it will be is filling the gap and then going on to higher highs, or not filling the gap is going to be a technique we watch real closely in Exxon 120-minute chart, and we'll keep it in mind. I'll just put it down here. XOM, look at, and I'll put it down, maybe way down at the end of the week or whatever. So that's that. And then what I want to look at, Exxon board XTO. Yep, I forgot about that. So now I want you to look at, I had a question over the weekend, would I look at UNG? UNG, as far as I'm concerned, it made a peak C, but it really wasn't verified. If you look at the NG, natural gas, also did but that had a much clearer pattern that showed that it was possibly the Chapman wave double top formation. Did I just show this? Oh, the question with the inside wedge. There's the inside wedge. This is on chapter 13, I believe it is. Chapter 13, the arch formation and the inside wedge starts on page 290, the whole thing. But basically what it says is that within a left side, right side price time match that you identify with the plumb line at a peak D, E, or F, that's the line down from the arch formation, could be the cup formation upside down. You want to be able to identify lower lows that will possibly give you a support line, a declining trend line support line that keeps getting tested until it hits your exact time measurement. And we'll look at it in real time. And what I typed in here for the ESZ, well, we won't be at the Z in another couple of days. Let's see what happens. There's that line, and the price says that by the 12th of December or before, I'm extending a little bit, but around about that point, we should hit 2020. That's 300 points down, and 300 and something points down in the Dow, 30 points in the S&P. We'll see if it happens. And it's going to be not just a real quick thing. It'll be a fairly slow rotational grind. That's what I'm really looking at. So that's that. And I had another couple of questions. Uri. Oh, I've not looked at Uri for a long time. URI is a United Rental, I believe. Oh, what a pity. I used to have this so nicely notated and everything. I'm really upset. I must call TradeStation. They promised that they'd have this ready. What it does, I'll do this now the way it should be, but it's not going to hold when I go to another chart. It'll all be missing. So I would be able to go A, B. I wouldn't even have to click. I'd just go A, B, C, D. Look, it looks like it's automatic. That's A, B, C, D. A, B, C, D. And there's that. Oh, I should have seen this before. How silly. Look, there's the doji candle at the top. And what is it? It reverses down and it goes from a high of 119.35 to today's low of 103.85. That is big, 16% decline altogether. No, it's 16. Is that right? Yeah, from 119 down to 103. Whoa, it's almost 20% decline. And that's Uri. That's United Rentals Inc. All right, Basil Chapman, I'll be back, and then I want to talk about copper and some of the other things. So we'll be back, and the Dow right now is down 39, S&P's down 30. Basil Chapman, Tiger Technicians Hour. Be right back.
UT take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. I had a question last week. I asked Greg to email me again about it in case I forgot. High short interest, he says. Cannot call in. Sorry, CLF if you get an opportunity. So, Greg, I didn't like it too much the other day. I said it's just there's just so much weight to the downside. CLF is Cliffs Natural Resources, Inc. I think there's going to be a really nice percentage bounce. But on the way down, it's just as big a percentage if it starts to slide. I want to see if CLF trading at 851 down 61 cents today, down 6.8%. I mean, I don't know if I want to mess with this. All I can say is that if it holds $8.10 to $7.91, which was the low on the 20th, if it holds that, it could make the pattern that I call the H pattern. You remember the H pattern? Let me just get there. H pattern, I should remember these all. I think that was Chapter 17, is that right? Chapter 17. There's the H pattern. If it holds the left side low bar, that would be very important, but it keeps making the scallops to the downside. So you want to play when it starts to get to the point where it possibly could make the lowercase, not H, but the lowercase M. And the second time round, if it tests successfully, you can have a nice trade all the way back to the upper part of the arch, which would take it to maybe 11. Oh, gee, 11. It's at 8.50. $10 is the 9.31 is the 9-period moving average resistance, and 10.04 is the 9-period moving average weekly resistance. To tell you the truth, I don't want you to mess with this. If it's just a little part of your portfolio that you say it's an experiment, then I would say wait until, I'd rather buy strength, number one, and number two, it might be too late because it'll be closer to the resistance. I'd much rather see how does it test the $8 to $7.90 area, and if it can test that successfully, I'd trade it for a bounce with a stop under whatever that low is. If it's still 79.1, I'd make 7.90 the stop. I just don't think it's worth. Let's see, Peak in the Den says, Vail and CLF similar charts. Vail to me looks a tad better. Check the balance sheets. Yeah, I agree. There's something wrong with these companies. I mean, look at the monthly. I don't think I'd even want you to trade for a percentage gain. The risk is just too great. Step aside. Okay, now let's do this. TLT. The TLT and Odin the Den just had a spectacular call on the TLT. Is trading at 122.19, down 30 cents. Leg B in the daily, trying to fill that long wick. That looked like one of those accidents, like a mistake, but it wasn't. It was a price move on the week of the 17th of October. It went to 127.68 and then plummeted down. Then it held the 9-period moving average. So this is an important phase, and I'm suspecting that if I'm correct in this correction in the market that's already begun, one of the reasons why we are mostly short. No, we're only short. We have no long positions. We do have long positions of short positions. Ooh, I made that complicated. We have gone long the ETFs that are short certain indices, and that's the way it is in sectors. Okay, so I'm looking at this and I'm saying if money is going to flow back into the safety, I love that, the safety of bonds, then the TLT should hold 121 to 120 support, 120.52 support, and in fact, it should move into this bar, the ugly bar of the 16th of October that has a high of 124.13 with a low of 121.44. That's where it should start to generate some resistance, and we'll see how that's handled. And if the market just suddenly turns around and we're at new highs in the next 3 days, I doubt it because I think we're going down. That's something completely different. So once again, for my opening call subscribers, we're mostly short. Watch the volatility index, watch bonds, and watch the dollar. And all of them, the Dolly, Bond, and Fixie are going to be really important right now. So thanks for being here, folks. Stay tuned. We've got Larry Perseverance, a great program coming up, and I'll be back to go and check out my opening call. Perfect time for it. Have a wonderful day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.